Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can currently see, the Australian dollar is consolidating near its highest level since mid-June, with the softer US dollar remaining the key driver after weaker than expected US employment data reinforced a negative bias towards the greenback. The US dollar index, which measures the greenback strength against a basket of six major currencies, is still hovering around 99.75 for the last 24 to 48 hours. After the ADP employment data increased by just 44,000 below the 68,000 forecast and down from the previous release of 95,000, adding to concerns that the US labour demand is losing momentum. Attention now shifts to Friday's non-farm payment, with employment growth expected to increase by 85,000 from 57,000 jobs added, while unemployment is expected to remain at 4.2%. The report remains the major catalyst for the Fed's expectation and the next broader move in the US dollar. The RSI, well, the market is somewhat mixed. Touch of divergence there from the MACD that could see the upside paused at 71 cents and see a pullback to around 69.70, or on the lows where I've outlined here to around 69.35. From there, I expect to see the market rebound and then take on the challenge of 71 cents. Turning to the euro, the market is still holding to a slightly bullish intraday bias above the 115 handle, with the broader dollar still weaker. And no doubt all eyes will be on, as I mentioned, the non-farm payrolls. Along with that, we also turn our attention to the Eurozone retail sales, which will provide the next insight into consumer spending across the region. Technically though, as you can see, the market's rising, but the divergence here in the RSI is concerning. So therefore we may find a cap around 115, 55, 65, which has been holding, and look back towards the bottom side of the range, somewhere under 115 to around 114.5, and reassess. Dollar yen is attempting to stabilise after its sharpest 4-day decline in nearly 2 years, although the broader outlook remains fragile. Looking at the technicals though, the market will probably challenge the upside at least to around 158 figure 25 and then maybe lower. The risk is still very much towards 155 of the lows here that we saw back in April, and seeing all these gains wiped, no doubt the market is still licking its wounds. Sterling, well, the market is still holding up quite well, but still hesitant to take the challenge beyond 134.65.75. After testing there was rejected. Looking at the technicals, they are buckled and therefore could look back for a move to 133.65 and reassess in case we had a bounce. Turning to commodities, well, since the break of the trend was to 250 points, well, at least. Well, we got over that, extended to 4,300 high, and now posting a Greystone Doji. From the technicals though, because the target has been reached at 4,250, and with the top side target reached now, I feel it's time to either consolidate or watch for a slight pullback. But for those who are still bullish, look towards 4,400 as the target. And wrapping up with oil, the market remains weak into its third consecutive day, but the technicals still from the MACD a bit hesitant. I'm not bearish at these levels. I think we could see a rebound, and if so, from around the level of 73 or maybe a touch lower to $71 a barrel, look back towards 78. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the day.